You know what time it is. It's the Crypto Crew. What up, family? It's Justin from the Crypto Crew. Just want to reach out to you guys. I was looking out on YouTube trying to find a replay of the earnings call on BBIG. I watched it on live, but I did want to rewatch it, but I couldn't find it. So I figured, why not just repost it so you guys could check it out. So here you go.
Greetings. Welcome to the Vinco Ventures first quarter 2022 earnings call. At this time, all participants are in a listen-only mode. If anyone should require operator assistance during the conference, please press star zero on your telephone keypad. Please note, this conference is being recorded. I will now turn the conference over to your host, Greg McNiff, Investor Relations for Vinco Ventures. You may begin.
Thank you, operator. Good afternoon and welcome to Bbig Ventures first quarter 2022 financial results conference call. I'm Greg McNiff, Investor Relations for Bbig Ventures. Vinco released results for the first quarter of 2022, ended March 31st, 2022, this afternoon after the market closed. If you did not receive a copy of our earnings press release, you may obtain it from the Investor Relations section of our website at investors.vincoventures.com. With me on the call today will be Lisa King, Vinco's Chief Executive Officer, and Philip Jones, Vinco's Chief Financial Officer. Certain matters we will be discussing today, including our growth strategy and expected growth opportunities and performance centered around the Lomotive platform, as well as certain transactions we expect to complete to fuel our growth, are forward-looking statements. Such statements are subject to the risks and uncertainties that could cause actual results to differ materially from those contained in the forward-looking statements. These risks and uncertainties are discussed in our documents filed with the SEC, including our quarterly report on Form 10-Q for the period ended March 31st, 2022, filed earlier today. And with that, I'd like to turn the call over to Lisa.
Thank you, Greg. Good afternoon, and thank you everyone for joining us. We're very pleased to report the positive momentum from our fourth quarter continued into Q1. We more than quadrupled revenue from the year-ago quarter, largely due to our acquisition of Advisor. But even without Advisor, revenue rose 51% from the first quarter of 2021. We're continuing our transition into a global content-driven ecosystem, and will do so with our core pillars to entertain, engage, and endorse, which each help enrich the Vinco ecosystem. We aim to entertain broad global audiences with compelling content, engage users with rich experiences on our platform, and create unique opportunities to endorse and advertise brands through our marketing platform and through artist, creator, and influencer relationships. In February, we completed our acquisition of Advisor, an advertising platform utilizing artificial intelligence and proprietary technology for analytics and programmatic real-time media buying. Vinco revenue increased 349.7% from the first quarter of 2021 to 11.5 million, reflecting the impact of the inclusion of Advisor. Also, the plan to integrate Advisor's technology for ad placement throughout the Lomotive app has gone very smoothly. Testing is currently in progress and our beta launch is near. We believe that Advisor, in conjunction with Honey Badger, our digital commerce company, will help us continue to grow and strengthen our engagement and impressions across our ecosystem and beyond. Lomotive, our short-form video and music social media app, continues to focus on user engagement in the US and internationally through distinctive partnerships, particularly in live entertainment. During the quarter, we continued our efforts to promote and expand the user base of our Lomotive app and related digital properties as we live streamed the Shaq's Funhouse event in February and the Okeechobee Music Festival in March. And just this past weekend, Lomotive live streamed events at EDC Las Vegas, where we hosted Grimes and Snoop Dogg. Vinco also announced May 18th, 2022 as the record date for the planned spinoff of Cryptide into a separate publicly traded company. Upon the closing of the spinoff, investors who hold BBIG stock through the distribution date of May 27th, 2022 will receive 1 share of the new company for every 10 shares of Vinco Ventures. This spinoff also included some of our legacy businesses as we continue our transition to a global content-driven ecosystem. Through strategic initiatives and growth, we'll continue to focus on enriching the lives of our users, viewers, our clients, our community, and our shareholders through our core pillars to entertain, engage, and endorse. I'm encouraged by our positive progress in the first quarter and look forward to continuing to execute our vision for Vinco Ventures in the coming months and beyond. Now I'd like to turn it over to Phil, who can provide a more granular insight into our financial results. Thank you for your time, everyone. Over to you, Phil.
Thank you, Lisa. Today, we filed our Form 10-Q with the SEC that provides details on our first quarter results and our financial condition as of March 31st, 2022. As I highlighted in our fourth quarter and full year earnings call for 2021 just over a month ago, 2021 was a very busy, transformative year for our business. Now, as we begin 2022, our financials are starting to show the early results of this transformation. First and foremost, during the quarter, we included the results of AdVisor since the acquisition in early February, which propelled our revenue to $11.5 million for the quarter, an increase of $9 million or 349.7%. In addition, initial crypto mining equipment sales at CW Machines helped further increase our revenue. CW Machines is a subsidiary of Cryptite and will be part of the spinoff expected to close at the end of May. We are excited for the AdVisor digital advertising sales and believe that this line of our business can be an area of significant potential revenue growth for the company. Gross profit during the quarter was $600,000 as costs for traffic acquisition increased to the acquisition of AdVisor and also due to the increased content creation costs at Honey Badger, which increased its activities in anticipation of the AdVisor relationship. We will work to increase gross profit from these businesses as we further integrate AdVisor with our other digital media properties. During the first quarter, we incurred selling, general, and administrative costs, or SG&A costs, of $26.8 million as compared to $11.6 million in SG&A costs for the first quarter of 2021, an increase of $15.1 million. Of this increase, $10.4 million was due to higher legal, professional, and transaction costs primarily associated with the company's acquisition of AdVisor. The remaining increase reflects the expanded size and scope of the company since the first quarter of 2021, including an increase of $4.4 million in advertising, marketing, and promotion costs as the company continues to invest in building market awareness of Motive, and an increase of $5.2 million in compensation costs, which reflects the increase in headcount over the past year as the company has grown internally and through the acquisition of AdVisor, as well as the consolidation of the compensation costs of the Motive since July of 2021. Offsetting these increases was a $7.6 million decrease in stock-based compensation between the two quarters. Similar to recent quarters, we recorded a significant total net other expense, which for the first quarter was nearly $353 million, as compared to a net other expense of $51.5 million in the first quarter of 2021. The significant increase in net other expense is due to the impact of the requirement that the company classifies warrants to purchase shares of its common stock as a liability upon issuance on its consolidated balance sheet, as these warrants are freestanding financial instruments that may require the company to transfer consideration upon exercise. Each warrant is initially recorded at fair value of the date of issuance using the Monte Carlo simulation pricing model and subsequently remeasured to fair value at each subsequent balance sheet date. Losses on issuance and changes in fair value of outstanding warrants are recognized as a component of net other income or expense. The company will continue to adjust the liability for changes in fair value into the earlier of the exercise or expiration of the warrant. During the first quarter of 2022, loss on issuance of warrants was $243.7 million, while the change in the fair value of the company's liability for its outstanding warrants as of March 31st, 2022, resulted in an expense of $86.9 million. The impact of our warrant-related expense was significant and accounted for 87% of our net loss of $372.9 million during the quarter. The impact of our warrant liability is something that we are focused on. as we continue to transform our business. To that end, recently on May 12th, we filed an 8K for warrant exchange and warrant exercise agreement that we entered into that, when elected by the holders, will begin to materially reduce our warrant liabilities and therefore their impact on our financial results in the coming quarters. As of March 31st, 2022, we had $130.8 million of unrestricted cash and $80 million of restricted cash, which is listed as a long-term asset to match the amended maturity date of the matching $80 million of convertible note underlying the cash restriction. Our balance sheet of March 31st, 2022 also reflects the impact of the consolidation of AdRiser, especially for accounts receivable and accounts payable, and for the deferred acquisition price associated with the up to 10 million shares issuable to the former owners of AdRiser in January of 2024. The deferred share issuance was given an estimated fair value as of the acquisition date of $23.3 million. And finally, once again, our balance sheet reflects the impact of our warrant liability, which was $429.2 million as of March 31st. But as we progress through the year, we will continue to see the beneficial impact of the inclusion of AdRiser into our business, along with the continued investments in the promotion and improvement of the Motive app and all of its digital properties, along with our content creation initiatives, all of which are designed to increase our organically generated traffic and viewership that will feed into the AdRiser digital advertising monetization platform, and thus completing the digital media ecosystem that Lisa described earlier. So we look forward to seeing the model progress and its impact on our financial results as we continue through 2022. Once again, I encourage everyone to review the 10-Q filed with the SEC today for additional details on our first quarter results. And with that, I'd like to turn the call back to Lisa for closing remarks. Lisa?
Thank you, Phil, and thank you all for joining us on the call today. We're excited about the growth opportunities ahead of us, and we appreciate your interest and support. We look forward to updating you on our progress next quarter. Thank you.
This concludes today's conference, and you may disconnect your lines at this time. Thank you for your participation.
Boys and girls, you know where we're going? To the moon. Are we there yet?